All right, and welcome back for another episode of Carnivore Trades. Today is Wednesday, August 17th, 2022. If you like the video, give me a thumbs up, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Don't forget the course is this Sunday, August 21st. Yeah, 21st, August 21st at 12 p.m. Cycles course. It's going to be done live. Can't wait for that. But anyways, let's get into the markets here. So Fed minutes obviously came out at 2 p.m. today. And, we got a bid initially. Basically, they said, a couple of governors expressed concerns of overdoing it, you think, on their tightening. And, the market liked that initially. But really, a couple of things. It's hard to make too much out of today. And it's hard to make too much out of the last couple of weeks, really. And for the same reasons that I've been saying for the last couple of weeks is because it's August. There's no institutional participation, and it's OPEX week. And this is typically known, the Wednesday of OPEX is typically known as Whipsaw Wednesday. And you can see here, we came down, gapped down. We tried to push lower a little bit. We bounced a little bit, pushed lower, and then we came back up. Then we bid, and then we came right back in. So a lot of whipsaw, a lot of volatility. Well, I wouldn't call it volatility. Market was half asleep most of the day, but a lot of just, rug pulling and jerking around and kind of premium burning and just trying to burn out that theta on the options premium expiring this Friday. So, a lot of this action has to do with that. And again, it's just hard to make a lot out of it. Really, right now, we're just waiting for kind of the volume to come back into the market. Apple is kind of at the fulcrum of the market right now. It's being pumped heavily on CNBC at this point. Not back here. Nobody was pumping it back here. Nobody was telling you to buy it back here. But now is a time when it's almost back to 3 trillion. Now it's safe to enter. There's no risk in buying Apple up here. So I encourage everybody to chase this up here. Close to all-time highs. I'm kidding, obviously, but it's just interesting to me how Apple has been, first of all, it hasn't built any support on the way up other than this kind of, gap, you could call that. And then you have a gap here, which, by the way, I do expect it to retrace to that 158 area. That would bring you to that 382 there. And then obviously your big support would be that 50% retrace in this pivot here. But Apple's just way overdone here, and it's really kind of carrying the whole market. And and the breadth hasn't been that great either. Really, outside of like the financials, there's been a few things that have done well here, but XLF's had a nice run off the lows. You got to give it credit. We've been talking about broker dealers every day about how they've defied gravity. But outside of Apple, take a look at what Google has done. Not really that impressive. Microsoft, yeah, it's up off the lows, but way off all-time highs. Meta, okay, that's a joke. That's not even close. Nvidia here, another big tech name, still way off it's barely off the lows even. What else do we got? Amazon's had a decent run. We'll give Amazon a little bit of credit. This one's had a decent run. Still way off the highs though. So we're not seeing really breadth, and it's you kind of get the feeling that once Apple starts to roll over, this market's going to have to find another horse. Otherwise, it's going to go into correction mode, and we're going to have to pull back. Which I think obviously you guys know my stance on that. I think that's overdue anyway. It's just been a huge move off the lows, and outside of this little chop here, we haven't built any supports on the way up, just like Apple. And we're extended and overbought. We got into that 200 moving average yesterday. We kissed it right on the nose, and then literally, the 200 MA 431.40, and the high of yesterday was 431.73. So basically, about as bullseye as you can get. It just came shy of this trend line here, but overall, I still think there's a little bit more upside potentially in this market here in the short term, but it's also way due for a correction. None of this matters until the volume comes back, until everybody comes back from vacation. If you're on vacation, congratulations, because you're not missing anything. I personally, I haven't really even taken, I think I've taken maybe 3 day trades this whole month. So it's just hard to find opportunities here. If you've been long and you've been trailing a stop, then you're pretty happy, but there's not many opportunities when everything's just one-sided up every day. You're looking for a pullback. Bulls are looking for a pullback to buy, and shorts are looking for a pullback to sell into. And nobody's getting that right now. Everybody's kind of waiting for that pullback, but it's not going to come yet. I don't think it's going to come until after OPEX week, at least not in a much bigger way. I think OPEX week, they probably hold us up a little bit. And then I think as we get closer to the end of the month, last couple of weeks of the month and September, that's when we start to see some selling pressure come back into the market. By the way, and I've mentioned this recently as well, but where's the bond bulls? You know, if the Fed is so dovish and they're going to save the day, why is the 2-year not up? You know, they have a little bit of a bear flag here on the daily. It did finish off the lows. We'll give it credit. The yield curve on 2s and 10s did steepen just a little bit after the FOMC, but I mean, take a look at the 10-year here. So that really didn't even, you know, it got a pop on the, not the FOMC, but the Fed minutes got a pop and came right back in. So it's right back down. You know, 30-year, same kind of thing, just up, right back down. So where's the bond bulls? You know, if the Fed's going to save the day, why isn't the bond market? The bond market should be surging right now. And the yield curve should be, you know, coming right back in. But we're still at a 40 bips spread on the 2s and 10s. And in fact, today, we actually had, I'll just show you here. So, you know, 2s and 10s did come just a little bit. And the 3-month and 10-year did come back a little bit here, but still in a huge downtrend. But 30s and 5s, 5s and 30s, you know, further inverted or further stretched out, I should say. Still pretty close to that flat line there. So not far off for them, for 5s and 30s. And then the 10 and 30 also came back in as well. So bit of a split tape there, but point is, this should be specifically the 2 and 10. This should be, you know, surging to the other, you know, the other way. And it should have done that really since the last FOMC, and that hasn't happened. So I'm kind of, where's the bond bulls, guys? So that's why I've been saying the last couple of weeks, you know, the bond market's kind of calling the bluff here on stocks. But again, until, you know, until we get, you know, institutional participation, I mean, this type of volume here, when there's, you know, 30 million shares traded at 1 p.m., that's not, there's no institutions doing that. You know, there's HFTs and retail. That's the bulk of it. So it's hard to really trust anything that's really happening here. You got to take everything with a grain of salt, especially going into OPEX. But again, doesn't mean this market can't get pushed a little bit higher here. But we got to be careful in this environment. Everybody knows it's overbought and it's extended. Even the bulls know that, and even, you know, the bulls I follow are saying the same thing. Like, can we get a pullback to buy? You know, so all I'm asking is just be careful here, because, you know, the volume will come back, and it'll probably come back without warning. So just be aware of that. Triple Qs here on the day. Very interesting to me as well, because Apple has surged, but the Qs are underperforming, right? So the Qs are barely above that pivot high from the 8th. And now, whereas the S&P has had a much bigger move here. I think maybe some of that has to do with XLF kind of bringing up the rear a little bit. But Apple makes up a huge portion of the QQQ, even bigger than the S&P. And it hasn't really helped out the Qs that much. So if we look at the semis, not really doing a whole lot here. You know, it's had a nice move off the lows, but that peak from August 4th, we're still below that. So semis have not participated in the recent rally per se. Same thing with cloud software. We follow that very closely. That, you know, had a nice move off the lows, but it's still kind of just chopping around in this area. So not participating in the last couple of days or weeks. XBI had a little bit of a dip today. That finished back below the 200 moving average. Nothing major yet, nothing crazy, but we're seeing tech kind of lag. Another thing, like, if we're going back to risk on, where's ARK? You know, ARK should be V-shaping, and it's still below, you know, the May highs. So from May 5th, that was your breakdown there. Let's look at May 5th on the spiders. That's all the way back here. So we're well above that now. So just a few little, like, kind of questions I have, I guess, as far as, you know, the people who are saying we're going straight back to all-time highs. I just don't see the breadth in that right now for that case. And I understand that there's a lot of bears. I understand that there's too many people calling for a crash. That's why we're having this squeeze. But guess what? There was too many bears here. You know, there was, but the market makers paid out puts right here. They paid out puts right here for this OPEX. They paid out puts right here for this OPEX. So it doesn't always, you know, sentiment doesn't always, you know, the technicals are first and foremost. So say all that to say this. There's some cracks in the armor. Let's just leave it at that. Anyways, we talked about semis. So basically coming in, that 250 has been a good resistance area. We do have a potential for a higher low. So we could push up here in the coming days if the volume remains light. IGV, same kind of deal. It's kind of consolidating sideways, so no real problems currently. Biotech, again, just kind of backing and filling. If it takes out this green bar, though, that's going to be kind of problematic, and then you have this gap here. But you don't want to see it get back into this range because that could be basically a fake breakout. Dow Transports, they got hit pretty hard today. They did come off the lows a little bit towards the end of the day on the FOMC bid there, but it did gap down pretty sharply. Again, you don't want to see it get back below this pivot. But overall, just for right now, it's just backing and filling. Let's not make too much out of it. Rates here, so 10-year did finish higher again, like I've been saying, so up 2.5% here on the TNX. TYX here was green as well, up 1.06. So rates continuing up here, not a good sign. And HYG, not a good looking candle there on HYG. If you lose these pivots down here and it starts to break down, could be a little bit of a leading indicator, because we know HYG can and has been a leading indicator that we've used recently to kind of predict where the market's next market turn is going to be. So watch this, keep this on your radar as well. VIX is still basing, so just kind of hanging in here. So again, watch the VIX. If it starts to uptick a little bit with the market, that is going to be another red flag to watch. All right, so home builders, XHB, gap down, these were overbought. ITB, same kind of thing here. So, this one never really broke out, but, just some more backing and filling for now. VNQ gap down, and then couldn't get back above that trend line there. So maybe coming into a little pressure. This has left a couple of nasty gaps on the chart, by the way, so be careful with the VNQ right now. XLF, we talked about that gap down, but this actually held up okay. I'm seeing JP Morgan on my other screen, that held up all right. BAC, this was definitely one of the stronger sectors today. So XLF has held up okay. Basically just gapped down, and that was the low of the day, whereas the rest of the market did meet new lows, around 11:30, 12 o'clock. But XLF's held up well. Broker dealers, kind of a little bit of a hanging man candle there potentially on the XBD, but this is held up really well as well, although it is wickedly overbought. And again, like Apple, it hasn't built any support on the way up, so this can come down just as fast as it went up. So just be aware of that. Crude here, energy got a little bit of a bid. I think there was some news out about Biden banning drilling again, or some one of those something like that to do with federal land, but basically just par for the course for this administration. But crude did manage to come, scratched out a gain. It came off the highs though, but again, one more dip, and then I think we got a really good buying opportunity here on crude. XLE managed to scratch out a gain as well, so seeing a little bit of money flow there. I think Exxon had a good day. Yeah, Exxon was up almost 1% there. And OIH, watch this here, because this can be a failed pattern if we don't reclaim this trend line. So OIH will probably go lower if we don't get back above this on Friday's close. So OIH green today, but still not reclaiming that trend line yet. And then Nat Gas, powerhouse move, still finished red, but basically almost got to double top. I don't have any trade on Nat Gas right now. It's too overbought for me to do anything with it. And because you made this higher low, I wouldn't want to short it right now either. I'd want to see at least a pierce of this area, but I'd rather see it pierce it and before pulling back. So now I don't really have any trade on it, but it's holding up well. Definitely respect that for the time being. Dollar index, really kind of a nothing burger. It sold off a little bit. We'll show you the intraday here. We dipped a little bit early, and then we dipped on the Fed minutes, and then kind of, rallied back. Overall, this is a nothing burger. On the daily, you're still potentially putting in an inside bar on the daily. So dollar can, push up here. I wouldn't rule that out. It's holding up well, and we got to respect that. Gold pulled back to the 20. Nice little pullback here. It held the 20 moving average for now. We'll see if it can put in a higher low. If it does, I like its chances of advancing there on the daily time frame to at least that necktie, but I think it can get through that. The more backing and filling we do, we can get through this moving average necktie if we put in a higher low here. And then silver, same kind of deal, potential higher low. We'll have to see what we get here if it goes through that Next level is right down here, and then you have one here as well, but I would prefer it make a higher low. I don't want to see it do any chart damage here on the daily. And then platinum also pulling back here to the 20. I like this here for a possible dip buy. So platinum is holding up well. I do like platinum here. And then palladium, basically just kind of a micro inside day. Same thing on copper here, so won't make too much out of that at the moment. Lastly, let's flip over and we'll get onto the coins here. So again, kind of going on, we've been talking about this lately, but, kind of going on the same hand in hand with ARK we talked about a minute ago. If risk is on, why is ARK not V-shaping? If risk is on, where's the Bitcoin bulls? Ether's had a nice pullback off the highs, hit that $2,000 target, had a nice pullback. There's still no technical damage here. That's still structurally holding up pretty well. But Bitcoin is on the weaker side. You don't want to see it break this lower trend line here on this daily time frame. That would be a pretty good signal of weakness, especially when you consider the weekly. You have a pretty nasty bearish inside bar there with that 20 moving average starting to catch up to price. So that 20 moving average, that's going to act like, it's going to act like a rocket fuel, essentially. It's like once that catches up, that's it. It's going to give it that boost of selling pressure to the downside. At least that's the way the technical picture is setting up right now. The fact that Bitcoin, and we've kind of been alluding to this the last couple of weeks, the fact that Bitcoin's not rallying is a red flag. The market's been surging off the lows and Bitcoin hasn't caught up. So at some point it's like time's up. You had your chance to rally, and now, if you can't break out, you're going to break down. So Ether has held up much better though. So no real technical damage currently, but definitely noteworthy that cryptos are not really participating in the rally. And it's like, well, all these crypto desks are blowing up and so on and so forth. But if the Fed's supposedly going to drop rates to zero and do QE again, then these desks shouldn't be blowing up anymore because, cryptos should be ripping. At least that's the way I would think the way it works, right? If the Fed's going to drop rates, the market needs to price that in, right? So anyways, again, flipping back over to the spiders. So a modest pullback day. And even with that volume, little uptick in volume after the Fed minutes, which was just algos, we still didn't even break the average volume here on a 50-day moving average. We're still 20 million shy of that. And this is including after hours as well. So very, very, very light volume pullback. Let's not make too much out of it yet, at least until we get some more volume in this market and we get those institutional players to come back from the Bahamas. Anyways, guys, going to wrap it up here. You guys take care. Don't forget to sign up for the course. Come find me on carnivoretrades.com, and I'll talk to you all tomorrow.